You're listening to Boomers Today with your host, Frank Sampson.
Well, welcome to Boomers Today. I'm your host, Frank Sampson, and of course, each week we bring you important and useful information on issues facing baby boomers, their parents, and other loved ones. And I do this every single time, but I have to thank everybody so much for all their support. Our listeners are growing each and every day, and it's because of you sharing our show, our podcasts with family members and friends, etc. And certainly there's a lot of different ways to listen to the podcast. Some of you are taking your morning walks and putting it on Google Podcasts or Apple Podcasts, or maybe you've downloaded our free app. It's the Boomers Today app that you could get on your Apple or Android phones. Some of you have gone to iHeartRadio, maybe to our website at boomerstodayradio.com. A lot of different ways to listen, but again, I just want to thank you so much. And I think I know our listeners are growing because we have just wonderful guests. And today's not going to be any different. We have with us Jim Sloan. Jim is a 24-year veteran financial advisor and 6-time author. His books were written to help investors become financially informed and make decisions that are in their best interest. Jim has been featured in or seen on local and national media outlets for his perspective on financial topics pertaining to baby boomers and retirees, such as the Wall Street Journal, Forbes, Fox Business, MarketWatch, and Reuters, and others. Jim is an educator and an investment advisor, representative of foundations, investment advisors, and SEC registered investment advisor. So Jim, I just can't thank you enough for joining us on Boomers Today. Thank you.
Well, thank you for inviting me, and I look forward to our discussion today on this very important topic.
Yeah, it is an important topic. So, I mean, there's so much value you bring. As we mentioned, you've written six different books. So, but what, if we were gonna talk for hours, maybe we could talk about a lot of different subject matters. But we don't have that much time today, so we're going to zero in on a particular one, and it's an important one. And I think as people age, we all are usually confronted with health issues, and it's always, a concern of, have I planned properly for this? I mean, one thing we do know for certain is we're all going to die. That's 100% guarantee, at least unless somebody can tell me different. But one thing we're unsure of is, are we going to remain healthy the rest of our lives? And statistics show that, when you turn 70, you got a pretty good shot, a high percentage that you're going to need some sort of long-term care. All right. So I guess my question to you starting out is, who should plan for a long-term care event?
Well, Frank, I think everybody should have a plan. And I'm not talking about long-term care insurance. I'm not saying everyone needs long-term care insurance, but I do believe that everyone that's 55 plus, age 55 plus, should have a long-term care plan in place. Because if a client has a long-term care event in their life and they end up needing care for a period of time, the financial consequences to the family and their retirement portfolio could be disrupted in a very big way. And if no part of a retirement portfolio has been allocated to pay for long-term care expenses and an illness lasts long enough, it could compromise the financial viability of a surviving spouse or the client's entire financial and legacy plan.
Yeah. So when I know we're not here to necessarily talk about long-term care insurance, but I'm sure you have to hear this on a daily basis. I hear it enough, and I'm not even in that end of the business, because I'm in that age group where people go, "What? Hey, do you have long-term care insurance?" And I know, and people would say, "I didn't get it; it was just too expensive," or "I had it and I canceled it." And I'm just going to, if I need it, I got my equity in my house or whatever. I mean, what do you say to people who decided to go the route of no long-term care insurance and but still having some sort of a plan in place?
Well, I would say that most people that I run into and have run into, baby boomers and retirees in the last 24 years, most of them, I would say 85, 90%, did not have long-term care insurance or do not have long-term care insurance. And as you said at the top of the show, Frank, we are all going to age. If we live the full life cycle, we're all going to age, we're going to become frail, and we're going to need some help. How long would we need help? How much help would we need? That's going to be determined. Now, the nice thing, let's say today at someone that's age 60 and they don't need care today, but what about 20 years from now when they're 80? What kind of care will they need? And secondly, what's the cost going to be? We know what the cost is today here in the Houston, Texas area is going to be around for assisted living facility. Annually, we're talking about $50,000. Nursing home, about $75,000. This is today. But if they don't need care for 20 years, what is the cost going to be then? Well, I have those numbers right here, and that is by 2040, assisted living annually is going to be about $106,000, and nursing homes going to be about $163,000. This is tax-free dollars that you would need to pay for care for 1 year. So the question is, it's not, do you need long-term care insurance? I think most people understand that they would like to have it. In fact, I've never met anybody that didn't want it, but the biggest factors that the reason they don't is because they say it's too expensive, or what if I pay these premiums all these years and I don't ever use it? And so what I'm saying is not everybody needs long-term care insurance, but everybody, I believe, should have a plan in place just for the simple fact that we are witnessing the greatest demographic change in U.S. history as we sit here today, and that is the U.S. Census Bureau projects that by 2060, 1 out of every 4 people in America will be 65 plus, and then there will be about 19 million that are age 85 plus. So we are rapidly seeing the aging of America, and somebody's going to have to take care of the elderly generation, the aging generation. Who's going to do that? So we'll talk about that as we move along, but that's something that I think your listeners would want to know, is that we are aging, and if you don't have a plan in place, then what's going to happen? A lot of people think the government's going to step in and take care of your long-term care cost, and we'll talk about that here later on in the show.
Yeah. So let's talk about that. You hear, and again, these are things I hear, and you must hear the same thing. Oh, my kids will take care of me. Well, when you hear that, what's your response to something like that?
Okay. Well, I would say, okay, well, they probably will, but let's walk through this. It is possible that you could be one of the lucky ones to never need this type of care. But if you did, let's say that one day you're unable to care for yourself. Who's going to step in and care for you? Your children? Your spouse? What if you have no children or spouse? What if your spouse were to pass away before you? What if your spouse was the one who needed care? Would you be able to physically, emotionally, and financially provide the necessary care for an extended time? And what you just said there, Frank, is interesting. My children would take care of me. And as I said, they probably will. But walking through that, what does that look like? Does it mean they will move in with you or have you move in with them and their family? Does it mean that they will provide hands-on care, such as bathing and dressing you? Does it mean that they will provide for you financially? You see, these are the questions that we have to answer. This is what planning is all about, is figuring out what your plan's going to be when that day happens. So when that day does happen, you're not running around frantic and saying, we don't know what to do, or making very bad financial decisions at that time just because you don't have a plan or coverage in place to help you offset those costs.
Yeah, no, it's And I know that, I deal with this every day in our work, and somebody who is confronted with some cognitive impairment, some form of dementia like Alzheimer's, or even somebody with Parkinson's, or, it's very difficult for another loved one, let's say an adult child or a spouse, to take care of somebody if they have not been trained to, and it just totally changes your lives, and
Absolutely.
so I think people have to, and there is, you know you live long enough, there's a strong likelihood that you could be in that, in that position. So let's just talk about, like, when you talk about long-term care plan, a plan, what are some of the key points that people should be considering in a plan? What are the key points?
Well, I would say that when we're talking about long-term care, I would say that it doesn't just impact the one needing the care. It also affects their family and friends, everybody in their world. So long-term care planning, not insurance, but planning, provides a roadmap so that you know what financial resources, private and government, are available so that family and friends ideally can be the care supervisor rather than the care provider. Because that's what's happening right now, Frank. Now, I take my mom, for example. My grandmother passed away a couple of years at age 95. She pretty much lived a healthy lifestyle all the way until the end of her life, was 6 months in a nursing home. Medicaid took care of that, and she was gone. She passed away. But prior to that 6 months, the previous 14 years, my mother took care of her pretty much every day. So the consequences for my mom were emotional and physical primarily, but for some of our listeners, it's also financial, because some people are going to have to cut back on their hours. Maybe they have to retire early, because when you have a parent or a loved one that has a long-term care event, then things change, and it changes not just for the one that has the event, it's changing for everybody around them. So when you say plan, that's what that involves. And not having a plan in place for an unexpected need for care over an extended period of time, here's the things that could happen. It could disrupt your tax planning, your estate planning, the financial planning that you have in place today. And here's how. See, people don't think about this. They think, well, we've got enough money, we'll take care of it if we need to, or we don't have a bunch, but then Medicaid would take care of us. Well, okay, well, let's talk about that. If you have assets of any sort, what's going to happen? Medicaid would step in, but you're going to basically have to be impoverished. But for those that are listening to the show and have assets, then here's what's going to happen. If you don't have a long-term care plan in place, here's what will happen typically. Paying for care requires a reallocation of cash flow. And this becomes a problem if most or all of your cash flow already is allocated to other expenses. Now, assets are capital in nature, and a retirement portfolio is capital. So here we go. If you have to go into capital unexpectedly to pay for care, then now you could become subject to market timing. What if the market is down? Now you still got to sell because you need the money. Then if you sell in an up market, that disrupts your buy and hold plan. And it could also cause or create unnecessary taxation. Okay, if you sell in a down market, you just locked in your losses. It also disrupts your estate plan to eliminate capital gains. Why? Because you're having to sell assets, pay capital gains to provide for your care, versus the step up in basis rule, which means your inheritors would typically inherit those assets tax-free. So again, it's a big problem not having a plan, because a lot of people are not thinking through these items that I just shared.
Gotcha. Great information. So, Jim, we're going to take I promise, a real quick break here just to recognize our sponsor. And then we come back, get you ready for this. I'd like you to talk a little bit about maybe some insurance and non-insurance ways to get long-term care coverage. We'll talk about both when we come back.
Sounds great.
Great. So I ask you, do you know anybody who may be concerned about an older driver? Well, Beyond Driving with Dignity is a facilitated self-assessment program for older drivers. The program has been designed to serve as a vital tool to facilitate older drivers and their families as they make appropriate decisions regarding the future of one's safe driving career. If the individual is a safe driver, an advisor will provide him or her with strategies on how to remain a safe driver as they progress through the aging process. If driving retirement is the appropriate decision, then the individual and their family are offered possible alternatives, resources, and a specific plan to ensure a smooth and successful transition from the driver's seat to the passenger seat. So to learn more, you can go to www.beyonddrivingwithdignity.com, or you can call 877-907-8841 to connect with an advisor in your area. So we're back with Jim Sloan, who's a veteran financial advisor and six-time author. So Jim, I want to make sure we don't run out of time, and never asked you for your contact information if people want to reach out to you. So take it away.
Thank you. Anybody that is listening, I welcome you to go to my website, jimsloan.com. And there are several things there that are yours complimentary. And the first is a copy of my latest book, The Financially Informed Investor. You can go there, give me your email and phone number, and you can download a copy of my book today. And one of those chapters is talking about what we're talking about today. I discussed that in a little further detail. So again, the copy of my book's available to you. Just go to jimsloan.com and download it today.
Great. So I have a question first before we get into back to the subject matter at hand. Financial advisors. So if, we have listeners all over the country and even outside the U.S., but let's talk about the listeners within the U.S. If they needed advice from somebody like you, are there regulations where you can, I know you're based in Texas, can you only service Texas? Can you service others outside of Texas?
Coast to coast, Frank. So
Great.
I am licensed and registered, to be able to do business, in all 50 states.
That's great. Great to know. Okay, perfect. So let's get back to the subject matter at hand. So we chatted a little bit before we started our recording here, and we were talking about different ways, insurance and non-insurance ways to get long-term care coverage. I hope we have enough time to talk about all that, but maybe you could help us understand some of these ways.
Absolutely. In fact, these 14 different ways, there are 14 insurance and non-insurance ways that I discovered that someone could get long-term care coverage. And so it was interesting when I was writing my book, this particular book a couple of years ago. I did all this research, and so I come up with this list, and I'll kind of go through it at a high level, of course. If any of your listeners want further details on this, you got my website. You can go there and just click schedule a meeting, and then we'll just jump on a 15-minute phone call, and I'll see if I can help answer some questions for you regarding this. But the first one, Frank, is going to be, everybody knows this, but you can self-insure. You don't need insurance, self-insure. Some of my clients self-insure, and they understand that they're going to pay 100% of their long-term care expenses out of pocket. And again, we just talked about why that might not be a good idea, because if the market's up, then you're going to disrupt your buy and hold plan. If it's down, then you're going to sell in a loss, and you got qualified plans, and then you got taxes to pay on that before you can get the money to pay for care. So dollar for dollar, it could be the most expensive way to provide long-term care. Secondly, Veterans Administration. If we have any veterans listening in, you have to have limited assets, and you have to have served 1 day in combat and 90 days of service. So limited assets, and what is that? Less than 80,000 of assets. You have to have served for 90 days, and one of those 90 days has to be in combat. Then the Veterans Administration will take care of the long-term care cost. The third one is Medicare. Now, Medicare is not is not designed to pay for long-term care for a period of time, but it will pay a portion up to 100 days in a skilled nursing facility. However, you have to be in a hospital first 20 days. They'll pay 100%. Days 21 through 100, they'll require a copayment, and then it basically provides acute care. And there is no long-term care past 100 days per benefit period. So that means this is really not a long-term care plan, but this is exactly this is exactly how my grandmother, who was on Medicare, had her long-term care expenses paid because, like I say, she didn't live more than 6 months after she was in a nursing facility. So again, Medicaid, there's Medicaid for those with limited assets and resources, and essentially you have to be impoverished to qualify. The fifth item would be traditional long-term care insurance. Most people know about that. It's the oldest type but least bought today. Dollar for dollar, it gives you the most benefits of all 14 options, though. Dollar for dollar, it gives you the most benefits. And I'm going to pause for just a second so I can address this traditional long-term care insurance for a moment. And, being a financial advisor, Frank, I want to make sure that, I understand the numbers. I understand, what care costs today. And then if you inflate that 3 or 4%, what care is going to cost in 20 years, 10 years, 30 years from now. And so by doing that, if I could just say, although people think that long-term care insurance is expensive, well, it really isn't, but most people haven't ran the math. They haven't got the facts on the table, and they haven't ran the math. I have, and I can show a single person, a female age 60, where she could pay basically 18 cents today for a dollar of a tax-free benefit in her future. So 18 cents, 17 cents today for she's buying a dollar of tax-free benefit in her future when she needs it, but it's only paying 18 cents or 17 cents today. And then if you're married, then that goes down to 11 or 12 cents per dollar. But again, don't have time to go into all of that, but I certainly will if anyone reaches out to me, and I can share with them how I come up with that.
Jim, can I ask you just a follow-up on that?
Yes, sir.
The traditional long-term care insurance, I know things have changed in the industry, and I know this is a separate subject matter that I'm sure we could do a show on in and of itself. But these kind of, I don't know what they're called, combination or hybrid policies, where you're buying you're buying life insurance and long-term care insurance together in one policy, and you kind of, from a risk standpoint, from the insurance carrier standpoint, it works out better for them, and it could work out better for the purchaser of the insurance. But would you say that those types of policies are sold more today than the traditional long-term care insurance policy, separate policy?
Well, not at all. I mean, you might think so, but
okay.
Not at all.
Interesting.
And what it's called in the industry is a linked, LINKED, linked benefit policy or a hybrid policy. Essentially, like as you said, it's a life insurance policy that essentially will, double or triple the death benefit for long-term care purposes. So let's say you put in $50,000 and you got a $100,000 death benefit, and now you maybe have $150,000 for long-term care benefit. So, essentially, that is how that would work. If you do not need long-term care coverage in your life and you pass away, the death benefit is paid to your beneficiary, the $100,000. But if you do need the care, then it's around $150,000. And then if for some reason you change your mind and say, hey, I want my money back, they'll give you your $50,000 back, but won't give you any interest, but they would give that back to you. However, that sounds good, but I can tell you in 2021, I haven't recommended a linked linked benefit policy in about 6 or 7 years, because with the interest rate environment we're facing, the trade-off, they're not really doubling and tripling as much as they used to. So now you may put in $50,000 and you may get $80,000 death benefit and maybe $110,000 or $120,000 of LTC benefit. Well, that could take care of maybe a year of coverage if you needed it. So that's not the be-all, end-all. But again, I'm going to hit these other ones here just before we run out of time.
I didn't want to. Sorry if I threw you off there.
Yeah. No. You didn't throw me off at all. That's good. Okay. Good question.
Yeah.
It's a valid policy. It's one of these 14 ways, but it's just not the most. It doesn't give you the most bang for your buck these days because of the low interest rates that we're facing. And that was my next one. It's called asset-based or linked benefit policy. It does solve the question of what if I don't use it? Well, then also you have full underwriting, but your family would get the death benefit if you never needed it. So that solves that. Then you have a long-term care rider that you could add to a life policy. Your premiums won't increase and your benefits won't change. There's a chronic illness rider that can be added to a life policy. There's an annuity with a long-term care rider. It kind of does the same thing. If someone has health issues, this is an option that might help them. It's less stringent underwriting than a traditional long-term care policy. And again, it's similar to the life insurance policy where you put in, say $50,000 and then maybe they'll double it or triple it for long-term care purposes. And then there's also something called a long-term care doubler. A lot of annuity carriers these days are basically saying, hey, if they're very, very friendly when it comes to being confined in a nursing facility or an assisted living facility. They pretty much give you 100% liquid of your assets, or maybe if you're receiving income, that income may double for 5 years. So again, that's something to consider. Number 11 would be a reverse mortgage. People know that they have access to their home equity, but we're talking about long-term care today. So something to be aware there. If you do a reverse mortgage to pay for LTC, if that's what you think you're going to do, your plan is, you just know that you have to continue paying taxes and insurance as long as you live in the house. Don't forget that. Number 12 is federal long-term care program. That's a federal retiree option. So if you're listening in and you're a federal retiree, there's a group plan. It's not guaranteed issue, though, but it's more lenient for those with health issues. Number 13 is a short-term care insurance package. It's basically long-term care, but in a smaller package. The max that it covers is 1 year, 365 days. And then the last one, 14, would be a life settlement. If you have an unneeded life insurance policy, you might be able to sell that policy to a third party and they provide the cash, and you could use that for long-term care purposes.
Great.
So those are the 14, and really the listeners are not going to know which of these 14. Who's going to know which of these 14 are best? Well, that's part of what I do on a day in and day out, weekly basis, is help my clients make decisions that are in their best interest, get the relevant facts on the table. Let's run the math. Let's figure out what your personal situation looks like. Do you even need long-term care insurance, or is it one of these other 14 ways, or maybe a non-insurance way that we can solve that? So it's having that discussion, and that's a good starting place.
Yeah, to try to do this yourself, I mean, is crazy. Just like we tell people, don't try to set up care yourself if you don't have experience with that. That's what we do. And what you do is help people plan for this. There's a lot of information. You provide us a great deal of information, but it just proves, don't try to do this yourself. So I would think that the first step is to talk to somebody like yourself. So why don't you share with our listeners again, Jim, how they can get in touch with you?
I certainly will. And just before I do that, Frank, let me share a couple of more things that I think is very, very important for every woman that is listening to this broadcast. Every woman needs to be aware of this, that women account for about 65% of long-term care insurance claims, 65%. And then more than 70% of nursing home residents are who? Women. The average age of admission in a nursing home for women is age 80. And then 75% of residents in assisted living facilities are who? Women.
Right.
And then two-thirds of home care users, the care inside the home, are women. So we're talking 75% of women are the ones that are going to typically file claims. They're going to need care. They're going to need it longer because they typically outlive men by 5 years. And I just wanted to share that. So for those of you listening, I thank you for listening today. And if you would go out to jimsloan.com, I would love to have an opportunity to meet you. We can have a virtual meeting. We can have a phone call. Just go to jimsloan.com. You're welcome to download a copy of my latest book, The Financially Informed Investor. And then also there's a tab there, a button you can click that says schedule a meeting. And let's just jump on the phone. Let's do a virtual meeting for a few minutes and see if I can answer some questions or be of some value to you.
Jim, thank you so much for joining us on Boomers Today. You're a wealth of information. Really appreciate it.
Okay. Thank you so much, Frank. I enjoyed it.
Yeah.
Thank you.
Great. And I want to thank everybody for joining us on Boomers Today. Please be safe out there, and we'll talk to everybody real soon.
You've been listening to Boomers Today with Frank Sampson. To learn more about today's show, visit boomerstodayradio.com and join us next time for another edition of Boomers Today.